Okay, let's go.
Hey everyone, welcome back. Today we're going to strip trading down to its absolute purest form, price action. It's really just the art of reading a chart based on the price movement itself, without getting bogged down by a bunch of secondary indicators. If you want to trade what the market is doing right now, not what it did 10 minutes ago, then you're in the right place. Let's dive in. So let me just ask you something. Do you ever get that feeling that your trading tools are just a little too slow? You finally get that signal to buy, but you look at the chart and realize, oh man, the big move has pretty much already happened. It's an incredibly common frustration, and believe me, there's a very specific reason for it.
And this slide, well, it really breaks it all down. Over on the left, you've got your lagging indicators. We're talking about popular tools like the MACD or the RSI. And they're called lagging for a reason. They have to use past price data to figure out what to tell you, which means, of course, there's always a delay. But on the right, you've got price action. It's based on what's happening right now, giving you a real-time signal of what's going on this very second.
All right, so here's our game plan for this explainer. First, we're really going to nail down this whole lagging indicator problem. Then we're going to unlock 4 huge secrets to reading price action directly. We'll decode candlestick bodies, dive into the concept of mean reversion, learn how to spot gaining momentum, and master the art of analyzing pullbacks. And then, of course, we'll put the whole puzzle together. Okay, first things first. Let's really get to the heart of this problem. Because once you fully understand why most tools seem to put you a step behind, you'll see exactly why focusing on price action is such a total game changer. And here's the bottom line. By the time a lagging indicator finally gives you the green light on an uptrend, the price has often already shot up. You end up chasing the market, buying near the top and selling near the bottom, instead of getting ahead of it. Price action trading is all about flipping that script. It's about becoming proactive instead of reactive, and that all starts with learning to read the chart itself. All right, let's get into our very first secret, and it's all about how we read candlesticks. Now, a ton of traders get really fixated on the wicks, but the real story, the story of power and conviction, that's almost always told by the body of the candle. So check this out. We call this a bullish signal candle. It's this big, solid green body with absolutely no wicks on the top or the bottom. What this thing is screaming at you is that buyers were in complete and total control from the second the candle opened to the second it closed. It wasn't a fight, it was a total victory for the buyers. And here's where the real secret comes in. A candle like this isn't just a one-time signal. It's like it leaves a footprint in the market. That price level becomes a super powerful support zone. And why is that? It's because the market has a memory. It remembers that buyers loved that price. So if the price ever comes back down to that level, there's a really high chance those same buyers are going to jump right back in. Okay, our second secret builds right on this idea of market memory. It's a concept called mean reversion. And honestly, it's almost like a law of gravity for the financial markets that you can totally use to your advantage. Put simply, mean reversion is just the idea that prices, no matter how wild they get, always tend to return to their average. A really common way to see this average is with something like the 50-day moving average. No matter how far the price stretches away, either up or down, it has this natural magnetic pull to snap back toward that line over time. I absolutely love this analogy. It makes it so clear, right? When a price goes on a massive tear, getting way, way above its moving average, that gravitational pull gets stronger and stronger, hinting that a pullback is probably coming. And it works the other way too. If it crashes way below the average, that same pull can signal a fantastic buying opportunity because we can anticipate that it's going to want to make that trip back home. Okay, on to our third secret, gaining momentum. This one is all about learning to read the speed of a price move to figure out what might happen next. It's not just about the direction of the trend, but the actual force that's behind it. So what is momentum? Well, it's the rate of change, it's how fast the price is moving. But a sudden increase in momentum, that's a huge clue. It's telling you that more and more traders are jumping on board, and they're doing it with some serious conviction. It means everyone is starting to agree on which way the price is headed. So this is what you're looking for on your chart. You might see a slow, kind of grinding uptrend, and then, all of a sudden, whoosh, the angle gets way steeper. Think of it like a rocket launch. It takes a ton of energy just to get off the ground, but once it gains momentum, it just accelerates like crazy. That sudden acceleration is exactly what we're looking for, because it often happens right before a major price surge. And now for our fourth and final secret. This is a big one, and it's all about understanding pullbacks. See, a trend never, ever moves in a straight line. And those little dips, those little pauses along the way, they can tell you everything you need to know about how healthy that trend really is.
So, what exactly is a pullback? It's just a moment where traders decide to take a little profit off the table. But here's the secret, it's all about how big that pullback is. A tiny little dip? That just means traders are taking a quick breather before they get back to buying. But a deep, nasty drop? Well, that suggests something way more serious, that people might be losing faith and just getting out completely. And you can see it right here. A weak pullback, that's a shallow one, tells you that not many traders are selling. This is a super bullish sign. It predicts that the trend is strong and probably going to continue. But a strong or deep pullback tells you a lot more people are cashing out. And that's a big warning sign that the price might go sideways or even reverse. Okay, so how do we actually measure this?
Well, we use a simple tool called the Fibonacci retracement tool. First, you just pick it from your charting platform. Now, it usually comes with a bunch of lines, so the key is to go into the settings and simplify it. You only need to keep the 0, the 0.382, the 0.5, the 0.618, and the 1 levels. Then, in an uptrend, you just click and drag it from the most recent low point of a move all the way up to the highest point. That's it. Now, here's the simple rule for reading it. If the price pulls back, but it stays above that 0.382 line, we call that a weak pullback. That's a very bullish sign. If the price dips below the 0.382 line, we call that a strong pullback, and that's our cue to be cautious. A weak pullback is exactly what you want to see in a healthy, strong trend. So we've got our 4 secrets: the story from the candlestick bodies, the gravitational pull of mean reversion, the acceleration of momentum, and the message from the pullbacks. But listen, this is the most important part. You can't use these things in isolation. Their real power is only unlocked when you combine them to tell one single coherent story. You're not looking for one single perfect signal. That just doesn't exist. You're looking for these clues to build on top of each other to create a complete picture of what the market's probably going to do next. It's all about finding that moment of confluence where multiple secrets are all pointing to the exact same conclusion. And this really says it all, doesn't it? Think of yourself like a detective. One clue is interesting, but it's not enough to solve the case. But what happens when you find a strong bullish candle right at the spot where the price is snapping back to its average, just as momentum is starting to pick up, and it's just finished a perfect weak pullback? Well, now, that's not just a clue. That is a powerful, compelling narrative telling you exactly where the price wants to go. So I'm going to leave you with this thought. You now have 4 incredibly powerful lenses to look at the market through. Instead of waiting around for some lagging indicator to tell you what already happened, you can now read the story of the chart as it's being written. So the real question is, what will you see now?